Good morning. It's April 9th. This is the Critical Point Podcast. This is Rich Pawson. Let's talk about the stock market here. Today we've had some news on the initial jobless claims surging over 6 million or something like that, 7 million. It doesn't matter. The chart is so explosive, so straight up. Just new highs in the data since 1950. It was higher than average trade expectations, yet the market didn't care. They bought the report. They've been buying all morning here, as we can see on this hourly chart. Taking out the high around 6 a.m. Central Time, that particular bar or candle was a signal that it was turning up for one of the smaller of intraday swings or trends, and we think that trend can end around 11 a.m. going on out towards the close of the day, so it could stay up all day. That swing will likely complete a larger level 5 swing, increments within level 4 interweek swings. So in other words, level 4 top, seller interest, buyer interest, and later today on into the start of tomorrow would be the time frame for a level top to complete this wave of buyer interest. We can have a seller interest tomorrow into a level 4, and that probably relates to ideas of, hey, we've got a 3-day weekend coming up. We've got another week of coronavirus data, and so they could very well take some profits here, at least from the bulls. Maybe even the bears decide maybe this is another opportunity to sell a little higher price, something like that. But as I'm going to show in a moment, it's possible there's going to be higher prices next week as well. At any rate, this hourly indicator is turning overbought here. It's a little bit of a widening spread, suggesting chance for lingering momentum, so we want to give it a few more hours here, but it is approaching overbought. We still have some outstanding objectives up here, 28.45 and higher. Not so sure it's going to meet it when it's already this overbought, but we'll give it a chance to see what occurs. Now, something else that's interesting is the cash S&P moved past the 50% retracement of 2792. And from what I understand from prior crashes from 1987 into the 2000s, what occurred is that when the market made a retracement and then went to new lows, it did not rally any more than 33% retracement. So the point is we're at 50% retracement, so this market is already behaving stronger than all the crashes going back to 1987. And just think about that, because in 2000s we had the financial crisis crash off super cycles, and the market was down, 55% for these major indices. So we've got a stronger market here. Fascinating statistics. Okay, let's switch out to something a little. So here's the daily chart, and we can see for the daily chart it has met minimum objectives here, so we want to watch out for that. But earlier this week we also added additional upside objectives over to this form of resistance here back in March. We do have the daily indicator, however, overbought. It's starting to roll over here. It's narrowing its spread, so it is kind of warning that we could be coming close to a top. Now, ideally, the L3 trend, which is made up of those L4s that I just showed you, the L4s being pops and drops when inside of L3 trends that are larger waves of buyer-seller interest. In fact, the largest type of wave during a month, the largest uptrend and downtrend during a month. The model suggesting it should not top out to next week. So we're assuming even if they want to sell today and or tomorrow, they're probably just going to be back buying on Tuesday, Monday night, whenever the market opens up again. So we want to give this a little more time to actually move up relative to this L3 trend, but we must also keep in mind it is short-term overbought. And finally, this is the weekly chart, and it looks now like our upside objectives could be too low here, running behind what the market's doing momentum-wise. We have a weekly indicator moving with widening spread, warning of lingering upside. And April 13th is the first week to allow for one of the more important tops, or I should say the second most important top during a year, called level 2. These buyer-seller interest waves would also have a little something more to do with actual supply and demand, fundamentals, economy, and whatnot. So we've been warning we could get some positive news, but at the very least we'd have buyer interest just trying to buy low prices. At any rate, we have added something different today. You realize we created this box inside of the original time objective where it's saying, okay, it's now going to top no later in week of April 27th, but we still must allow the latest of May 4th, the prior forecast. Now we've narrowed this down where we think the market won't top the week of April 20th, but probably no later than the week of April 27th. But we still must allow a top for as late as May 4th. So there is enough time here to move higher than what we're showing for objectives if the market were to maintain this pace of momentum. As always, manage your risk relative analysis of others. Thank you.